Hello, trading is closed on January 27th, 2021. We always start with our disclaimer. This is my trading plan for tomorrow, January 28th, 2021. If the call doesn't come from the MEJT system, it shouldn't be expected to have the same level of accuracy. I could be completely wrong, so please trade at your own risk. My email is mejt.trades@gmail.com. We always review what we said. Have a good chance of a gap outside of the range. I thought that the weak pattern we saw yesterday would be more convincing if we gapped down sharply. So that's what happened. This was the pattern with the early low, and tomorrow has the early high. During the day and the morning, MEJT said ultimately higher price it would print and ultimately lower price it would print, and that happened. It said this rally here was false, but it also says this decline's false. Gives us a target of 3790.66, most likely to print Thursday, tomorrow. Don't forget at major changes in trend, MEJT almost always leaves a failed target. This was quite a drop. You can see that in just a day we erased all of the year's gains. The fact that the low, we were trading pretty much at prices we saw middle of last month. So all this rally was erased in a day. This was the chart we showed yesterday. It's the low to high pattern of George Lindsay based on the drop here. I think there's a very good likelihood that this one's going to work, and we've seen a major high. We still need confirmation by going under today's close and ideally under the low, because if this gets reversed tomorrow, it doesn't count. We had this target at 39.20. Anything is possible when you break through an upsloping trend line in a straight line. There's a strong tendency to return to the line. I'm not going to claim it works every time, but it works often enough. That doesn't mean we have to start back up early tomorrow. It allows for the possibility of one higher high here, but I'm not counting on it at this time. Not ruling it out, but that looks like a pretty significant break to me, assuming it's confirmed. Well, this was the diamond on stilts. This is the first challenge of the origin of the left stilt, and the next challenge typically breaks through in a straight line. Now here was the previous diamond on stilts. I was calling this the first challenge, even though it left a gap, which we did fill today. Typically, when you get this stilt, you're going to find support under the left stilt. If this was the first test of the origin, we should have just kept right on dropping in a straight line, and we still could if we gap down tomorrow. Otherwise, you could call this the first test of the origin, and the majority of the time, certainly not every time, that tends to hold. Tomorrow's pattern has the early high. Typically, it's a bearish day with a final hour low. If we rally early instead, it turns the tables. Additional strength can be seen in the days to come. There's a breadth indicator. It tells you the percentage of stocks in the S&P 500 in uptrends. That has tanked. You're not going to get a strong rally from here to new highs that stick when breadth is collapsing, shows much fewer stocks are supporting the rally. The top of this leg should be in, but if it's not, any new high should be a 2B top, which is a false move, just quickly reversed. We still need confirmation of the drop by trading under today's close. Until that happens, you can't be 100% sure, but it's hard for me to picture this as just an accident. A number of factors typical of market lows were seen today. They can indicate capitulation at a low, but they can also indicate a rush to the exits at a high. There's a volume spike in the E-mini. Doesn't mean you won't spike higher tomorrow, but that's often seen at least short-term lows. The NASDAQ McClellan Oscillator and the Volatility Index have traded far past their Bollinger Bands. Now they could trade further past it tomorrow, but once they reverse, gives a buy. The first move after the FOMC announcement was higher. Usually this telegraphs the direction of the next major move. Usually and always aren't the same thing. There's a higher target, but the system typically leaves a failed target as a major change in trend. So it all boils down to this. Longer term, the odds are quite good we've made a top. As far as tomorrow's concerned, we have a decent chance at a rally, but it should fail at some time. That failure doesn't have to come tomorrow. Not saying it won't, but it doesn't have to. This is one of those times where I think the intermediate to longer term call is much easier than to call for tomorrow. Intermediate to long term, we're either at the top or very close to it. Been talking about it a long time. But we've had sentiment indicators compatible with a top that lasted really 3 months. It's not really a pinpoint indicator, but at some time excessive optimism like this gets punished, and the punishment usually lasts for more than a day. So for the intermediate to longer term, we should have much lower to go. But as far as tomorrow is concerned, if we don't gap down, take this low out early, I think we have a good chance at a recovery of some kind. But I'm not optimistic that if we get such a recovery, it will necessarily hold into the close. The stronger it is at the open, if it occurs at all, the greater the chance it'll hold. Just a brief fling up, I would just say the downtrend remains intact. A huge move up, you might have to wait a while for the downtrend to continue. Tomorrow has the early high, and that's today's call.